YouTube, I'm back with another video. So today we are going to talk on ICT AMD pattern, which is a very powerful topic. You can be using it in your trading journey to make it more simpler and easier, right? So we have the AMD pattern. So simply before understanding or before going deeply into the topic, we must be understanding what is actually AMD pattern or what is power of three. So simply the AMD pattern is known as accumulation, manipulation, and distribution, is an ICT concept that occurs consistently in the market, and by understanding it, one can pave the way to profitability. And then comes to the phases of AMD pattern. So we have some of the phases, right? The AMD pattern consists of three key phases, which are accumulation, manipulation, and then distribution phase. So these are the key phases of the AMD pattern. Now let's break it down and understand each phase of AMD pattern one by one. So now we have the accumulation phase. You can look up at this example right there. So in this phase, the market consolidates and forms a range to accumulate both buy and sell orders. Now, and then comes the manipulation phase. So in this phase, we look for the fake move, right? The market creates a false move known as a Judah swing to manipulate retail traders and trigger their stop losses, right? So we accumulation and then a false move. Why? Because we are going lower as our drawn liquidity is on these lows, right? So we look for manipulation, which is above these highs, right? And then there comes a distribution phase. So distribution phase is the key phase. When we are trading, we simply would be looking for this distribution phase to happen, and we would be looking for the fair value gaps, a breakup block, or whatever you have entry model. Then simply we'll be looking for these lows for the bearish scenario, right? So in this phase, the market moves in its intended direction, and we aim to anticipate the move to secure profit. So let's understand it more better on the visual example. So we have this example, which is a bullish AMD example. We have accumulation and then manipulation. We have shift in the market, right? And then we would be simply looking for the distribution, right? So this distribution phase is the key phase where we look for the entries, right? So if you look up at this example now, we have the high time frame key level, drawn liquidity, and we have accumulation, manipulation, hitting the high time frame key level, and then simply we'll be looking for this distribution. Now we have the bearish example right there. We have this accumulation phase, and then manipulation, and then this distribution key phase, which we are going to look for, right? So if you look up at this visual example, we have accumulation and then manipulation, high time frame key level has been triggered, and then we simply would be looking for entry patterns to distribute price lower till drawn liquidity. Now let's go into the charts to understand it. Chart example, right? We have 15-minute gold chart. So price is fractal, right? So we have this accumulation phase, right? Let's just mark it out. We have this accumulation phase, right? Let's just change the color. So now we have this accumulation phase, right? We want to see price to take out these highs. Why? Because we are bearish, right? And we have this sell side liquidity down there. So I want to see price to take out this sell side liquidity and also manipulate these buy side liquidity. So we have this accumulation phase and we have this buy side liquidity and sell side liquidity. So let's see what is price going to do. So now you can see price is just taking out this buy side liquidity, and we want to see price to shift the market structure, and we will be aiming for price to take out these lows. So now we have this manipulation phase right there. So this is going to be the manipulation phase, and then we want to see price to create the distribution phase below these lows, right? So let's see what is going to happen. So let me just change the colors, right? So now we simply have taken out this low, which is the swing low. We simply have shifted the market structure, and we have also this breakup block. So we want to see price to come into this and then trade below, right? So this is the breakup block, and also we have the fair value gap. So we want to see price to simply just trade after it, and then we'll be simply looking for price to just go below it is a distribution phase, right? So let's see what is going to happen. So now we have just simply hitting this breakup block, and now we want to see price to simply take it out this low, right, which is the sell side liquidity. So now we have simply taken this low off. So this is accumulation, we got the manipulation, and then we have shifted the market structure, and then we got the distribution phase, right? Let me show you another example. So now we have another example, right? So we have this consolidation phase, right? We want to see price to either trade above the highs or below the lows. If we are trading below it, then we would be looking for the price higher, right? If we are trading above it, then we would be simply looking for price to go below. Why? Because this would be then the manipulation if we are trading above, right? So we have this accumulation phase, and then we want to see either the manipulation above it or simply the manipulation lower, right? And then we would be looking for the distribution phase, right? So let's see, we have this gap, which can be the high time frame key level, right? Which acts as a high time frame key level, right? And then we have this buy side liquidity, right? So let's see what is going to happen. So we are simply trading below these lows, right, which is the sell side liquidity. Now this is the manipulation phase, right? So this is what we call the manipulation phase, and then we simply would be looking for the bullish momentum, the distribution phase, right? So let's see what is going to happen. Now we have this inversion fair value gap. We can be using it as our entry model, right? So we simply touched it, and then we are simply looking for the price to go above, right? We have accumulation, manipulation, and then now we are going to be just looking for the distribution phase, right? So this is what we call the distribution. We have this inversion is our entry model, right? So let's see what is going to happen. So right there, we have simply hitting our target, right? It run liquidity.